What's up, trading floor? Rise and grind, trading family. It's Friday morning, jobs day, and the SPY had a 9-day winning streak that ended Wednesday. Now, it's back near all-time highs. Everything looks easy, but underneath, a Fed official yesterday said something the market is pretending it didn't hear: hike rates. We're breaking down the disconnect, and the non-farm payrolls number at 8:30 that settles whose story survives.
Quick reminder, nothing we say is financial advice. Do your own research, trade your own plan. This is two guys talking markets, not telling you what to buy.
And today, that's exactly the energy.
Tension is the word. The SPY is at all-time highs after a 9-day streak that was snapped Wednesday. And yet yesterday, Jeffrey Schmidt of the Kansas City Fed stood up at the Hochatown Economic Forum and said the biggest risk is inflation. And the Fed may need to raise rates to tamp it down. That's a sitting Fed president explicitly floating a hike, and the market shrugged it off.
Just bounced from 750 to 756 like it was a headline about the weather.
Bragging like that bounce tells you the market does not believe him. It's pricing rate cuts, not hikes. But here's the thing. It wasn't just Schmid. Mary Daly echoed the same inflation unease, and Barkin was nodding along even though he tried to balance it. 3 officials in one day, and the market chose to hear none of it. That's a trust gap. The SPY is saying we don't believe you, and the Fed is saying we might have to act.
So, the fight is set. The market's got its rate cut hopes. Schmid's got his hawk. That's a credibility crisis waiting to blow.
Exactly. And the jobs number at 8:30 is the tiebreaker. If the print comes in soft, Schmid becomes a lone wolf and the market wins the argument. If it prints hot, that hike language gets real ammunition. The whole morning is whose story survives. WC, you've been tracking this print all week. Take us through it.
Yo, I've had my eye on this one. The whisper for non-farm payrolls is 105,000. That gives us 3 clear lanes. Print 105 or below, and the market wins. Schmidt looks like an outlier, the rate cut shelf holds, and the SPY likely blasts past 756 resistance.
So, the status quo, no problem.
That's one lane. Second lane, we print 150,000 or hotter. That's Schmidt getting ammo. The hike narrative suddenly has real legs, and the market has to reprice something it hasn't been pricing at all. That's where the rally gets gut-checked.
And the third lane?
If the number stumbles, say 70,000 or worse, nobody wins. Recession whispers go from background noise to center stage. The market's already jittery under the hood. You'd see a full reset on rate expectations.
So it's not about guessing the number. It's about which narrative walks out of 8:30 alive.
That's the whole show. Whose story survives?
And that uncertainty is why my wave trader algo is sitting on 13 block signals right now. Every single one is gated behind exponential moving averages. The short-term ones are still below the long-term ones. The momentum is choppy intraday, even though the SPY looks fine. The internals are screaming that there aren't clean setups. Cash is a position.
That's the hidden story. The SPY's at highs, but your algo is basically saying, not today. That's how tops form. Breadth narrows, systems can't find entries, and eventually, the few names carrying the weight get tired.
It's a warning, not a crash call. But we've got another layer to unpack. The geopolitical axis just shifted. WC, you called the whack-a-mole. Iran cools, Korea heats, and oil can't decide what it wants to be. Walk us through it.
Right, so the good news first. Iran de-escalates. Trump says no war unless troops die. Oil drops 3%. That's a full $3 move. The Israel-Lebanon ceasefire is holding. All of that is a tailwind for consumers and small caps.
So the headline is relief.
But the physical oil market is telling a completely different story. Vitol, one of the biggest actual barrel movers on the planet, is warning about a gasoline supply crunch heading into summer. Meanwhile, Treasury Secretary Bessent calls the whole thing transitory. So you got 2 oil markets. The paper market trading headlines and the physical traders screaming about real shortages. I know which one I trust.
Vitol moves actual barrels. Bessent moves talking points.
That's exactly it. And while everyone is staring at the Iran ceasefire paperwork, Xi Jinping flies to Pyongyang. Same day, Kim Jong-un is testing nukes. This is not a coincidence. The United States is distracted by internal politics and a winding down war, so China steps right into a power vacuum. Xi's reinforcing his only reliable ally in Asia and sending a signal to Seoul and Tokyo.
So the risk didn't disappear, it just rotated theaters.
Rotated hard. And you can see it in the internals right now. The Qs are down 0.75% and IWM is up 1.45%. That's not risk off. That's a clean rotation. Asia exposed tech is getting sold. Advanced micro devices, ticker AMD, is down 4%. Micron, ticker MU, leading the semi-decline. While domestic small caps are getting bought because lower oil helps the American consumer. Defense names are getting a bid on the new geopolitical axis. The market isn't panicking, it's repricing.
That divergence is the most actionable read of the morning. The market won't price in Xi Kim today. The models need the weekend to digest it. But if a joint statement comes out of Pyongyang, Monday's open could gap semis lower and defense higher.
Exactly. So the playbook is, don't chase the headline, watch the rotation prove itself. My TFT algo is sitting with 12 positions grinding red, so I'm not forcing anything pre-data. My personal gut account is mostly cash. About 10,000 sitting, with 2 limit orders out there. ExxonMobil, ticker XOM, at $147.50. And Taiwan Semiconductor, ticker TSM, at $420. Neither fills until price decides.
Smart posture. On my side, my wave trader algo is holding some existing positions. One of the few green spots is Kohl's, ticker KSS. They're getting $190 million back in tariff refunds. A real cash injection for a retailer the street had written off. That's a genuine catalyst. Meanwhile, Lululemon, ticker LULU, is crashing to 2018 lows, and Michael Burry is holding the bag. The consumer is getting rescued in some names and absolutely wrecked in others. You can't trade retail like a sector. You've got to pick your spots.
And that's the whole week in a sentence. The surface says everything is fine. Underneath, the internals are a mess of rotation, blocked signals, and stories that haven't been priced yet.
So here's what we're watching tomorrow and into Monday. First, the SPY 750 support held all week, and 756 is resistance. The jobs number is the catalyst to break one way or the other. Second, the Qs versus IWM spread is the tell. If it widens further on a soft print, the rotation thesis is confirmed. Third, any joint statement out of Pyongyang over the weekend will gap semiconductors, so watch AMD and Micron levels. And fourth, the physical oil market chatter. If Vital's warnings intensify, that paper-physical divide could blow up fast.
That's a clean framework. Don't chase the morning. Let the number print. Let the rotation show itself, and find your spot in the afternoon or Monday. Trading family, rise and grind. We'll see you at the close. Nothing we said is advice. Do your own work. Ape together strong.
So, watch the tape, not the headlines. I'll be in the chat after the print. Out.